And welcome, it's Mary Ellen McGonagle here with your weekly show for Friday, March 22nd. Today, as usual, we're going to go ahead and take a look at those current markets and see where did we close the week and beyond. You want to be aware of and on the lookout for potential sector rotation where strength is shifting from one area to the other, as always with an eye toward you participating in that newfound strength and not being in those newfound weaker areas. Also, we're going to take a look at the news that drove price action last week, a couple of very key items that are not just near-term but are long-term drivers relative to the markets. And then last up, viewer question of the week, and it's all about capitalizing on a stock that has had a big pop. We are continuing to see that price action take shape in companies that are reporting earnings or have news. So first up, taking a look at some of those news items, we did see home builder confidence reached a new high since last July. Nice boost for that area, and also housing starts. They rebounded by the largest number in 9 months. Also out was the Federal Reserve's comments, and this was a very key component driving price action last week. The markets pulled back going into Wednesday's announcement by Fed Chair Powell, and then also comments. And in essence, it was revealed that the Federal Reserve is continuing to anticipate at least 3 rate cuts this year. Very good news for the broader markets, and we did see growth and other areas respond favorably to the news. Also, we got news that leading economic indicators posted their first increase in 2 years, indicating that the economy is continuing to expand, and more news on the housing front with existing home sales jumping. Again, good news for home builders. And next week, we will have core inflation data reported on Friday. It's going to be that PCE data. It's the Federal Reserve's preferred metric for keeping on top of inflation. And also on that Friday, Fed Chair Powell will be speaking as well. So it could prove to be an interesting day for the markets because inflation and interest rates in response to that inflation has been a big driver for the markets. Also next week, consumer confidence and consumer sentiment data will be released as well. We could see movement in retailers in response. So from here, let's go ahead and take a look. Where did the markets close for the week? And here we are. This is a daily price chart of the S&P 500. And what I wanted to point out to you is the fact that not only did the S&P 500 post a new high last week, it did so breaking out of this 3-week base. And I highlight that because the markets really did need a pause period given its sharp advance from November. And this breakout after this period here of consolidation provides a platform from which we could very easily see another leg up. We also have positive RSI and MACD indicating the near-term uptrend in these markets remains in place. From here, let's go ahead and take a quick look at the Nasdaq Composite. And this is another index that came out of a lengthy basing period to hit a new high, pulled back just a bit today, but the same concept in mind here. It did, the Nasdaq, pull back below that 21-day simple moving average on Wednesday going into those Fed meeting notes, but was able to recover quite nicely. We also have a positive RSI and a nice MACD crossover, that black line up through the red indicating a new uptrend. From here, let's go ahead and take a look at the underlying sectors in the S&P 500, the 11 major sectors. And this is a 2-month daily price chart view. I've gone ahead and added that relative strength indicator, sorted these sectors in descending order. And here we are, energy up here at the forefront, remaining here despite underperformance last week, seeing a bit of an advance, but not much compared to other areas such as growth stocks. Industrials continue to remain up here at the forefront, 2.6% advance in this sector that I'm anticipating will remain strong as long as we have that strong economic backdrop and a lowering interest rate environment. Down here, we also, as mentioned, want to be aware of some of these weaker areas. Healthcare has been stalling here over the last couple weeks. Not a lot of interest in this consumer staple, more defensive area of the markets, and certainly due a pause after this strong advance coming out of November. Other areas in this lower quartile are consumer discretionary. Now, of note is overall, the group did outperform. It was up by 2.6%. I'd been on the lookout for this uptrend from this February period to be resumed. We did see that, and we also now have that black line up through the red with that MACD crossover. Good news for some of these discretionary areas, most notably housing. And let's go ahead and get into that. Take a look at some of these ETFs beneath these broader sector ETFs. And again, 2-month view, RSI, and take a look. No big surprise here. Home builders up at the forefront, up almost 5%, breaking out of this base and advancing with bullish momentum indicators. Also up here at the forefront, this is what I talked about with consumer discretionary, and that is retail stocks. The group overall, XRT, was up 2.1%, not quite as high as the broader markets, but there certainly are pockets of strength within this ETF that's now entered a new uptrend. Moving through these other areas that encompass more refined views of the market is a resumption of the uptrend in semiconductor stocks. And this is going to tie in with a view of a name that is in that semiconductor space that was up 18% last week. We'll take a look at that. And with this semiconductor group, we can see that we did recover back above that 10-day simple moving average, but investors must note that the move into these semiconductors is very selective. So you'll want to have access to things such as my MEM suggested holdings list that comes out in my Sunday report and then is expanded upon on my Wednesday midweek report. So down here in the weaker area, we talked about healthcare stalling a bit. Here's medical devices that have pulled back and are remaining flat. Also in that healthcare space, biotechs not faring particularly well. They were flat again this week after last week's pullback in the overall group. Another area that has recovered but is also selective as far as those names participating is software. This is IGV, the software ETF. You can see it's back up above these shorter term moving averages. We have that MACD crossover from a nice low level that could point to a further advance. But again, you do need to be selective as far as where within software you're putting your money to work. Last up, we're going to take a look here at the yield, and we talked about Federal Reserve's, their rate cut campaign that may start as soon as June, and we can see the yields that are generally declining. Again, good news, particularly for growth stocks. Now, from here, let's take a look at that stock I mentioned in the semiconductor space that had a big gap up. The company not only reported earnings ahead of estimates, but they guided their growth estimates higher, all about AI-related growth. And we can see this gap up pushed MU into a base breakout, super high volume. Now, as mentioned, the stock did move up over 18%, and many investors would naturally believe that they missed the move higher, but I'm going to take us to a couple of other views of this chart so that you can examine that move and decide whether there is, in fact, further near-term upside. This is an intraday 15-minute price chart, and we can see here we are with that gap up, and due to the shorter term nature of the chart, it will capture every move. For me, I'm going to go ahead and take a look at the 1 hour chart on Micron Technology, MU, and you'll see an entirely different view. It smooths out each and every nuance, and here we are with that gap up. The stock did pull back, but it remains above this 13-hour simple moving average, your RSI up remaining in positive territory, and likewise with your MACD. Now, from here, what we're going to do is go ahead and take a look at a even longer term view of MU, and this is a weekly chart. And what we are seeing on this weekly chart, I'll go ahead and mark this up. A lot of my work is centered around identifying and spotting stocks that are advancing out of long bases. And here we are with MU, and it is coming out of a 13-month base. Here's that base breakout, and here's the heavy volume. We can see this MACD trending upward with further upside potential. Likewise with that RSI, and the weekly view is going to give you insight into the potential longer term move in a given stock. So we have that 1 hour chart looking constructive, also the longer term weekly, and back to the daily chart. With this gap up, you can see that we didn't give up any of that price action on that gap up. That's quite bullish. As the stock continues to advance, we could see certainly a period of consolidation. What you're going to be on the lookout for is for the stock to not close this gap up. That would be negative. From here, we can take a look at an example of a stock not in this group, but it also had an 18% advance after reporting earnings. Here we are with SHAK, and you'll want to have precedence when looking at names that have had these sharp advances. In this case, SHAK pulled back very lightly. I'm going to add a 5-day simple moving averages. This is one of the names from my MEM Edge report, suggested holdings. We got in before this gap up, but by adding this 5-day simple moving average, this blue line, you can essentially use pullbacks to that area as long as we remain above this 21-day, and your momentum indicators, the RSI and the MACD, stay in positive territory. You're in good standing. That's it for this week. Have a great weekend, everyone. I'll see you here again next Friday.